Hello, everyone, and a very warm welcome back to the Safe, Simple Sound podcast. I'm your host, Alex, and I'm so glad you're tuning in. We believe in empowering you to seize financial control and build a future that's not just secure, but also adaptable to whatever life throws your way. Today's episode is inspired by a fantastic article from our own team here at Safe, Simple Sound titled Financial Security with Flexibility. Is Safe, Simple Sound your answer? This piece really dives into a challenge many of us face: how to strike that crucial balance between robust financial security and the equally important financial flexibility. A couple of things from the article really stood out to me. First, the analogy of Shelby the trustworthy tortoise. This idea of having a strong protective shell representing our security, but still being able to move and adapt to the environment, which is all about flexibility. It's a great visual. Second, it highlights how our secured philosophy isn't just an acronym, but a practical roadmap to help achieve this balance. Something a real client in the article attested to when they mentioned appreciating the long-term benefits and the adaptability of their plan. This really resonates with our core belief in providing strategies that are safe, simple, and sound. And these insights tie in perfectly with what we're going to explore today. We'll be looking at how you can achieve that vital blend of asset protection and adaptable strategies in your own long-term financial planning. It's all about empowering you with clear, actionable insights. So, get comfortable, maybe grab a notepad, because we're about to explore how you can build a financial future that's both strong and agile. Let's dive in. Today, we're tackling the financial security and flexibility dilemma. Are you a seeker? It sounds a bit dramatic, doesn't it? A dilemma? But honestly, for many people, especially those of us building careers, families, and futures, this really is a central challenge. We're talking about that constant balancing act between wanting a rock-solid foundation, true financial security, and needing the nimbleness, genuine financial flexibility to navigate all the twists and turns life throws our way. Think about it. On one hand, you want to know your income is protected, your assets are safe, and you have a buffer for the unexpected. That's your financial security. It's the bedrock. But on the other hand, life isn't static, right? New opportunities pop up, career paths shift, family situations evolve, and sometimes unexpected challenges appear that require us to pivot. That's where financial flexibility comes in. The ability to adapt without derailing your entire financial world. For many individuals and families, it genuinely feels like a tightrope walk. You lean too far one way, you risk instability, too far the other, and you might miss out or feel stuck. So this leads me to a question for you to ponder, and maybe you felt this. In your own financial journey, where have you most acutely felt that tension between needing robust security and desiring the flexibility to adapt to new opportunities or challenges? Take a moment to think about that. Now, if this tightrope analogy is hitting home, you might just be what we at Safe Simple Sound call a security and flexibility seeker. These are folks who instinctively understand this balance. They prioritize asset protection and ensuring their income streams are as stable as possible. They really value smart risk management strategies, not avoiding risk altogether, but understanding and mitigating it. Crucially, seekers get that life circumstances change. They're not looking for a financial plan set in stone for 30 years. They're looking for adaptable financial plans that can evolve with them. We actually have a bit of a mascot for this type of person, Shelby the trustworthy tortoise. Now, I know what you might be thinking, a tortoise? But hear me out. Shelby has that incredibly strong, protective shell. That's her financial security, her amazing asset protection. But she's not stuck in one place. She can still move, adapt to her environment, and navigate obstacles. Her shell offers protection while allowing movement. That's the essence of what a security and flexibility seeker is aiming for. They want that strong protective shell combined with the ability to adapt and move forward confidently. So what happens if we don't find this balance? Let's explore the cost of imbalance. If your financial plan is too rigid, too focused only on security with no room to maneuver, you might find yourself missing out on valuable opportunities. Perhaps a great investment, a career change that requires a temporary dip in income, or even just enjoying life a bit more. More than that, when unexpected life changes do hit, and they will. A rigid plan can cause immense stress because it simply can't bend. On the flip side, what if you're all about flexibility but without that secure base? Imagine being incredibly agile but on shaky ground. That can lead to significant instability. You might be able to jump at every new thing, but without a foundation, you're vulnerable to financial shocks, a job loss, a market downturn, an unexpected large expense. That kind of flexibility, without a secure anchor, isn't true freedom. It's often just a precursor to anxiety. This might be a good moment to ask yourself, can you recall a specific instance where a lack of financial flexibility created significant stress for you? Or conversely, when a strong financial safety net, that robust security, proved invaluable during an unexpected life event? These real-life experiences are powerful teachers. This balance isn't just a nice to have. It's absolutely critical for long-term financial planning and achieving sustainable financial stability. This is especially true for those of you listening who are perhaps in your 30s, 40s, or 50s. You might have dependents. You're likely in the thick of building your careers, accumulating assets, maybe paying off a mortgage, saving for education. These are peak building years, but also years filled with change and responsibility. Having a plan that provides both a safety net and the ability to adapt isn't just smart. It's essential for navigating these dynamic decades successfully and with less stress. It's about creating a financial life that can weather storms and seize sunshine. So, what's the solution to this dilemma? We believe it's about embracing a structured yet adaptable approach to financial planning. This isn't about having all the answers for what the future holds, because none of us do. Instead, it's about building a framework that is robust enough to provide genuine peace of mind today, while also being agile enough to allow you to confidently navigate an uncertain future. It's about knowing your foundations are strong, but your sails are ready to adjust to the prevailing winds. And that brings me to another point of reflection for you. What does financial peace of mind truly mean to you? And how does the concept of an adaptable, long-term financial plan fit into that vision? Really think about what ingredients make up that peace for you. All right, so let's quickly recap what we've covered in this segment. We talked about that tricky tightrope walk between financial security and financial flexibility. We defined the security and flexibility seeker, someone who, like Shelby the trustworthy tortoise, values both asset protection and adaptable financial plans. We explored the significant costs of imbalance, missed opportunities, and stress from too much rigidity or instability from too much ungrounded flexibility. And critically, we highlighted why achieving this balance is so vital for sustainable financial stability and long-term financial planning, especially during those key asset-building years. The core idea is that a structured yet adaptable approach is key to both peace of mind and future readiness. Now, I want to give you a little something to take away and work on. Your call to action from today's discussion is this. Reflect on your current financial plan. Does it adequately address both your need for security and your desire for flexibility? And then, perhaps more tangibly, consider jotting down 2 to 3 areas where you feel this balance could be improved or explored further in your own financial life. This isn't about finding flaws. It's about identifying opportunities to make your plan even stronger and more responsive to your life. I hope that gives you some good food for thought. Finding that sweet spot between security and flexibility is an ongoing journey, but one that's incredibly worthwhile. And speaking of building that strong foundation, that secure base we've been talking about, it ties in perfectly with our next topic. We're going to delve deeper into fortifying your finances. We'll explore exactly what makes up a robust safety net and how you can build one that truly protects you and your loved ones. This isn't just about having a little money tucked away. It's about constructing a comprehensive defense system for everything you're working towards. It's fundamental to your overall financial security and truly the cornerstone of any robust financial planning. So let's get into it. What exactly is a comprehensive financial safety net? When I say financial safety net, I want you to think bigger than just your savings account. Sure, savings are a part of it, but a true safety net is a multi-layered defense system. Imagine it like fortifying a castle. You wouldn't just have one wall, right? You'd have a moat, strong gates, watchtowers, a whole system. Similarly, this net is designed to protect your assets, your income, and crucially, your family's future. It's absolutely key for achieving that deep sense of financial security we all crave and is a crucial part of effective long-term financial planning. It's the bedrock that allows for sustainable financial stability. Now, let's talk about the first pillar holding up this fortress. This is your first line of defense, your financial shock absorber, a robust emergency fund. Think of it as your personal financial firefighter, ready to jump in when unexpected flare-ups occur, like a sudden job loss, an urgent home repair, or a medical bill that blindsides you. This isn't your fun money or your investment portfolio. This is your dedicated Life Happens Fund. So, how much is enough? Well, the general rule of thumb is 3 to 6 months of essential living expenses. But honestly, this really depends on your personal situation. If you have a variable income, or if you have dependents relying on you, which is common for many of our listeners in their 30s, 40s, and 50s involved in family financial planning, you might want to aim for 6 to 9 months or even more. It's about what helps you sleep at night. Building it can feel daunting, but effective strategies include automating contributions. Even small amounts add up, and keeping it in a liquid, easily accessible account, perhaps a high-yield savings account. This is foundational. So let me ask you, how confident are you that your current emergency fund could truly help you withstand a significant unexpected event? Something to ponder. Okay, so your emergency fund handles the smaller fires. But what about the infernos? That's where strategic insurance coverage comes in, our second pillar. This is all about risk management and asset protection on a larger scale. It's about transferring the risk of catastrophic financial loss to an insurance company. Let's quickly demystify a few key types. Life insurance. If you have dependents or anyone who relies on your income, this is non-negotiable. It's a cornerstone of family financial planning, ensuring your loved ones are cared for. Disability insurance. Honestly, this is one of the most overlooked but critical types. Your ability to earn an income is likely your biggest asset, especially for professionals. Disability insurance protects that income if you're unable to work due to illness or injury. Property insurance. This includes home and auto insurance, protecting your physical assets from damage or loss. Liability insurance, often part of your home auto, but also consider an umbrella policy for extra asset protection if your net worth is growing. It protects you from lawsuits. Proper insurance coverage isn't just an expense. It's a vital component of how to build a financial safety net that's truly comprehensive. It's about safeguarding what you've worked so hard to build. So, a quick check-in for you. When was the last time you thoroughly reviewed all your insurance coverage? Does it genuinely align with your current life stage, your assets, and your financial responsibilities? Are there gaps? Our third pillar goes beyond just insurance. It's about other smart strategies for protecting your assets, for shielding what you've built from unnecessary risks. This is where things like proper account titling come into play. For example, for couples, how are your bank accounts and investment accounts titled? Could it create issues down the line? Then, there are legal structures. For some, especially those with more significant assets or complex family financial planning needs, things like trusts can be invaluable. They can help protect assets from creditors, ensure they pass efficiently to your heirs, and play a big role in long-term financial planning and legacy building. This isn't just for the ultra-wealthy. It's about smart asset protection for anyone building a solid financial future for their family. Think of it as adding extra layers of security around your financial castle. Finally, and this might be the most important pillar because it supports all the others, cultivating a protection-first mindset. This is about truly understanding the importance of financial cushioning and prioritizing these protective measures. It's not about being overly cautious or pessimistic. It's about being realistic and proactive. When you have this mindset, building your emergency fund or paying for insurance coverage doesn't feel like a burden. It feels like an investment in your peace of mind and your sustainable financial stability. It's this foundation that actually gives you more confidence to pursue wealth building and embrace adaptable financial strategies because you know your downside is protected. You're not just hoping for the best, you're prepared for the unexpected, which is a key part of intelligent risk management strategies for personal finance. So, to recap, a strong financial safety net is multi layered. It's built on the pillars of robust emergency reserves, strategic insurance coverage, and smart asset protection strategies beyond insurance. And it's all underpinned by a protection first mindset that prioritizes sustainable financial stability. When these are in place, you're not just protecting what you have, you're creating a secure platform for future growth and the financial flexibility to adapt to financial planning for life changes. Now, for your call to action this week, it's simple but powerful. What's one concrete step you could take this month to strengthen a component of your financial safety net? I want you to take 15 to 30 minutes this week to assess one critical component of your financial safety net. Perhaps use an online calculator to check your emergency fund target, or pull out one key insurance policy, maybe your disability or life insurance, and really try to understand its coverage details. Knowledge is power, and this small step can make a big difference. Building this safety net is an ongoing process, not a one-time task. But by focusing on these pillars, you're taking significant strides towards true financial security. And that actually leads us perfectly into our next discussion. Once you have this strong, protective foundation, how do you build in the adaptability we talked about earlier? How do you ensure your plan can evolve with you? Next, we'll be exploring future-proofing your plan. You won't want to miss it. What happens when life, in its wonderfully unpredictable way, throws you a curveball, or even a fantastic new opportunity? If your safety net is a rigid, unbending wall, it might crack under pressure. We want it to be more like a resilient, intelligently designed structure that can adapt and evolve with you. This isn't just a nice to have, it's fundamental to modern long-term financial planning. So let's kick things off with our first key point: why financial flexibility is non-negotiable in modern financial planning. Think about it. Life is dynamic. It's not a straight line, is it? For many of us, especially those in our 30s, 40s, and 50s, these are years packed with change. You might be looking at career shifts, a promotion, a new industry, maybe even starting your own business. Or perhaps your family is growing with new additions, or kids heading off to college, or even thinking about supporting aging parents. And then there's the big one: market volatility. The economy ebbs and flows. Investments go up and down. A financial plan that's carved in stone, designed for a static, unchanging future, simply isn't going to cut it. It's like trying to navigate a winding river with your boat's rudder locked in one position. You need the ability to steer. Your plan must be designed for change, anticipating that the landscape of your financial planning for life changes will inevitably shift. This brings me to our second point. What are the hallmarks of adaptable financial strategies? What makes a plan truly flexible? Well, it's not about having no plan at all. It's about smart design. Look for adjustable components. Can you easily increase or decrease your savings contributions as your income changes? Are your investment allocations reviewed and potentially adjusted based on your life stage or market conditions? Another hallmark is built-in review triggers. This means you're not just vaguely hoping to look at your plan sometime. You have specific points, maybe annually or after a major life event like a new job or buying a home, where you reassess and recalibrate. And importantly, adaptable financial strategies are those that can evolve without requiring a complete tear it all down and start over overhaul. Think of it like a modular kitchen. You can update the countertops or appliances without ripping out all the cabinets. This inherent flexibility is key to maintaining your financial security through life's twists and turns. Now, a common concern I hear is, Alex, if my plan is too flexible, will I lose my security? And that's a fantastic question, leading to our third point: balancing security with growth through smart flexibility. This isn't about abandoning caution. It's about creating a plan that's robust yet responsive. Adaptable financial strategies actually empower you to seize financial opportunities for wealth building while maintaining your core security. Imagine the market takes a temporary dip. A rigid plan might have you panicking, or worse, locked into inaction. A flexible plan, however, might allow you to strategically invest more at lower prices if that aligns with your long-term goals and risk tolerance. It's about avoiding excessive rigidity that can make you miss out on growth or feel trapped. Think of a strong, healthy tree. It's firmly rooted, but its branches can bend and sway with the wind, allowing it to thrive. We're aiming for that balance, that sweet spot of balancing financial security and flexibility. So let's get practical with our fourth point: practical applications of financial flexibility. This is where the rubber meets the road. We're talking about things like flexible spending strategies. This could mean having budget categories that aren't set in stone, allowing you to shift funds from, say, entertainment to home repairs if an unexpected need arises, without derailing your entire financial plan. In the investment world, it could be portfolios designed to adjust to market conditions or to your changing risk profile as you get closer to retirement. And then there are financial products or policies. We recently featured a client testimonial on our blog from TB who said, "Although the premiums were initially higher than I expected, they clearly explained the long-term benefits and the flexibility to adjust the policy as my financial situation evolves." That's a perfect example. Whether it's life insurance coverage that can be modified or an investment vehicle with options for withdrawals or contribution changes, this adaptability is a cornerstone of a future-proof plan. It's about protecting assets while maintaining financial flexibility. And this all ties into our fifth and final key point for today: the crucial role of regular financial plan reviews and collaborating with professionals who champion adaptable approaches. A flexible plan isn't a set-it-and-forget-it document gathering dust. It's a living blueprint. Those regular reviews we talked about, that's when the adapting actually happens. And working with financial professionals who genuinely understand and prioritize flexibility can be a game changer. They can help you build in those review triggers, identify adjustable components, and navigate those financial planning for life changes. This is especially vital for effective long-term financial planning and robust risk management. You want someone who isn't just selling you a product, but helping you build a resilient strategy. So as we explore these ideas, I want to pose a few questions for you to reflect on. Think about your own situation. First, looking ahead 5 to 10 years, what potential life changes, positive or challenging, could significantly impact your financial needs, goals, and overall strategy? Maybe it's a career leap, starting a family, or planning for a big purchase. Second, how locked in or rigid does your current financial plan feel? Are there specific areas where you wish you had more inherent flexibility to adapt if your circumstances were to change unexpectedly? And finally, what does the concept of maintaining security during transitions mean for your unique situation? And what specific financial structures or strategies would give you the most confidence in that area? Maybe it's a larger emergency fund, or knowing your insurance coverage is adequate. Thinking through these can really illuminate where your plan shines and where it might need a bit more elasticity. All right, to quickly recap our journey through financial flexibility today, we've seen that financial flexibility isn't just a buzzword. It's a non-negotiable for navigating our dynamic lives, allowing your financial plan to breathe and adapt to career shifts, family growth, and market changes. We identified the hallmarks of truly adaptable financial strategies, things like adjustable components and built-in review triggers. We talked about how smart flexibility allows you to balance that core financial security with opportunities for wealth building, preventing your plan from becoming too rigid. We looked at practical applications, from flexible spending strategies to adaptable financial products, like the insurance policy our client TB appreciated for its modifiability. And finally, we underscored the importance of regular reviews and working with professionals who prioritize these adaptable approaches for your long-term financial planning. Now, for your call to action this week, I want you to identify one major financial goal or strategy you currently have. Then, brainstorm 2 to 3 ways you could intentionally build more flexibility into achieving or managing it to better accommodate potential future changes. For example, if your goal is saving for a down payment, could you set a tiered savings goal with different timelines? Or if it's your investment strategy, could you incorporate a plan for periodic rebalancing or dollar cost averaging to adapt to market swings? Give that some thought. This idea of building a plan that's both strong and flexible is exactly what we champion here at Safe Simple Sound. And it leads perfectly into our next topic, where we'll introduce the secured approach. We'll break down a holistic framework designed to help you achieve exactly this kind of robust, adaptable financial security. How do you actually build a plan that is both incredibly strong and resilient, providing that deep financial security, yet also agile enough to move with you? How do you effectively combine that crucial need for a stable foundation with the ability to adapt and thrive? Well, that's exactly what we're diving into now. Here at Safe Simple Sound, we've developed a philosophy, a comprehensive framework to help you achieve just that. We call it the secured approach. Think of it as your roadmap to not just balanced growth, but truly lasting wealth and that all important, sustainable financial stability. It's designed as a holistic answer for achieving that deep sense of financial security and the nimbleness of financial flexibility. Because frankly, we believe you shouldn't have to choose between them. So, what does secured actually stand for? It's an acronym, and each letter represents a vital pillar in this journey to a more confident financial life. Let's break down the first part. S is for seize financial control. This is all about creating those reliable financial foundations, building your confidence in the financial decisions you make. It's about knowing where you stand, feeling empowered, and truly taking the reins of your financial life. Next, E stands for embrace mastery of cash flow. This means building robust emergency reserves, that financial cushion we often talk about, and developing flexible spending strategies that genuinely work for your life, not some generic template. Good risk management really does start with solid, predictable cash flow. Then we have C, create a financial safety net. This is where we focus on comprehensive protection strategies and multiple security layers. It's about crucial asset protection, safeguarding what you've worked so hard to build and ensuring your family is protected. Think of it as constructing your financial fortress, brick by thoughtful brick. Moving to the second half of our secured framework, U is for understand financial choices. Knowledge truly is power, especially with money. This pillar emphasizes making informed decisions, always balancing that need for security with exciting opportunities for growth and wealth building. R stands for reap the benefits of compound growth. This is where the magic of steady, safe wealth building comes into play. We're not talking about chasing fads or get-rich-quick schemes, but implementing sustainable growth strategies that let your money work diligently for you over the long term. Then, E is for embrace financial flexibility. We've talked a lot about this, and it's a core tenet of our philosophy. This means having plans that are resilient and can adapt to change, big or small, without derailing your entire financial future. It's about building adaptable financial strategies from the outset. And finally, D, develop wealth and legacy. For many of our listeners, this is the ultimate goal, creating lasting family security, building sustainable family resources, and establishing a legacy that can ensure multi-generational stability. Reflecting on these 7 elements, which one or two resonate most strongly with your current financial priorities or perhaps your biggest concerns right now? Maybe it's building that safety net, or perhaps you're focused on understanding your choices better. Just pinpoint what jumps out to you. Now, you might be wondering how this integrated, secured approach really helps our listeners, especially those security and flexibility seekers we often talk about. Busy professionals, families juggling multiple responsibilities, often in their 30s, 40s, or 50s. The truth is, this framework is specifically designed for you. It promotes balanced growth strategies that don't force you to sacrifice peace of mind for opportunity or vice versa. It's about achieving that harmony in your long-term financial planning. We've seen this time and again with our clients. For instance, like the client TB we mentioned in some of our resources, who initially had questions about certain aspects of their plan. But once we walked them through how each part contributed to their long-term financial goals, emphasizing the long-term benefits and the inherent adaptability of the strategy, the value became crystal clear. They felt confident and, most importantly, secure. It's about seeing the bigger picture and understanding how these layers of financial security and financial flexibility work in concert. This brings me to another point for reflection. When you consider the complexities of long term financial planning, risk management, and wealth building, how does a structured yet adaptable framework like the secured approach appeal to you? Does that idea of having a clear roadmap, but one with built in flexibility to navigate life's detours, feel reassuring? So, what's your path forward with Secured? How can you start aligning your financial actions with these powerful principles? It begins with taking small practical steps. Look at each element of Secured, SECURED, and ask yourself how your current actions stack up. Are you truly in control? Is your cash flow mastered? Is your safety net robust? Building this secure, flexible, and prosperous future is a journey, and sometimes having a guide can make all the difference. This is where considering professional guidance comes in to help tailor the secured approach to your unique circumstances, ensuring your plan for asset protection and growth is truly personalized and effective. And this leads me to a final thought for you to take away today. Inspired by the secured philosophy, what's one actionable step you could commit to taking this year, maybe even this month, to move towards a more balanced, secure, and flexible financial future? It doesn't have to be monumental. Perhaps it's finally setting up that automatic transfer to your emergency fund or scheduling that long overdue review of your insurance policies. So, to recap, the secured approach: seize control, embrace cash flow, create a safety net, understand choices, reap growth, embrace flexibility, and develop legacy, offers a comprehensive roadmap. It's about building deep financial security without sacrificing essential financial flexibility, ensuring sustainable financial stability for you and your family. It's about managing risk management thoughtfully and pursuing wealth building strategically. If you value financial security and flexibility, and if this idea of a balanced, integrated approach resonates with you, we encourage you to consider if the secured philosophy aligns with your needs. We invite you to schedule a complimentary consultation with us at Safe Simple Sound. We can discuss your protection needs and learn how our approach balances safety with adaptability to help you begin building your secure yet flexible financial future. You can find all the details and more information on our website at safesimplesound.com. Taking that first step, even just exploring the idea, can be incredibly empowering. We hope today's discussion on the secured approach has given you a lot to think about and, more importantly, a clear path forward. And that, everyone, brings us to the end of another discussion here on the Safe, Simple Sound podcast. What a journey through the essentials of blending robust financial security with vital financial flexibility. We started by understanding that tightrope walk many of you in your 30s, 40s, and 50s, especially those with families, might feel. We explored how to identify if you're a security and flexibility seeker. Our very own Shelby the Trustworthy Tortoise, someone who values both a strong protective shell and the ability to adapt. We then delved into the practicalities of fortifying your finances, stressing the importance of a comprehensive financial safety net. Remember, this isn't just about savings. It's about strategic insurance coverage and smart asset protection measures as key components of your overall risk management. Building that strong foundation is paramount. And crucial to navigating today's ever-changing world, we talked about future-proofing your plan by embracing financial flexibility. Your financial planning needs to be a living document, capable of evolving with life's twists and turns, ensuring your adaptable financial strategies keep you on course. I think for many, the real power comes when we tie it all together with the secured approach. That framework, seizing control, embracing cash flow, creating a safety net, understanding choices, reaping growth, embracing flexibility, and developing legacy, really offers a clear roadmap. It's about making informed choices that support your long-term financial planning goals. Just like the client we mentioned, who found confidence in the adaptability and long-term benefits of their plan. This entire discussion was inspired by our article, Financial Security with Flexibility. Is Safe, Simple Sound your answer? And I hope today's episode has brought those concepts to life for you. Thank you so much for joining me, Alex, and for being part of the Safe, Simple Sound community. Your time is valuable, and I truly appreciate you spending it with us. If today's episode resonated with you, I encourage you to visit our show notes. You'll find links to the original article, more information on the secured approach, and even a way to schedule a complimentary consultation if you're curious about how these principles can apply to your unique situation. And as a small call to action, perhaps reflect on one area of your plan where you could build in a bit more security or flexibility this week. Don't forget to subscribe so you won't miss our future episodes, where we'll continue to explore topics designed to help you build a financial future that is both strong and agile. And if you found value today, a review or sharing the episode with a friend or colleague who might benefit would mean the world to us. Until next time, remember our goal here is to help you seize financial control so you can move forward confidently. Keep making those choices that are safe, simple, and sound. This is Alex signing off.